Hello traders, Day Trader Matt here, businesswithtrading.com, doing a trading strategy recap for the 14th of April, Tuesday, and today was just one of those days that go down in history books. We killed it today. It was just a great day. Today we made 7 trades. We were 6 for 1. And I know 7 is a lot more than our average. I always, tell people to inquire 2 to 3 trades a day on average. And that's pretty much what we average. 7 trades is a bit much, but, when you're hitting it in all cylinders, why not? 28 and a quarter points is what we ended up with. We did not have a unsuccessful trade until our 5th trade of the day. So we actually were doing quite well. Usually my strategy, if we start to do bad, I start to lessen the trades. But if you're doing well, there's really no reason to do that. You don't want to force any trades. But if the market's moving well, which it did, I moved up nicely, moved down nicely, and then it moved up again. And you're working inside of 2090 was the high, and 2075.75 was the low. So you're working with a big range on the day. That is something that really does help out. When we first started the day, did we think that we were going to see this? I'm pretty sure a lot of people did not think that we were going to see that, me included. I didn't really expect, a move down and up. But I like to go with wherever the market takes me. It's like being in the ocean and just, relaxing and laying down in the ocean and just letting it take you. Similar to that. So anyway, what did we do today? First trade, actually our first couple trades happened very quick inside this bar here. We took a short up here. The market did come down. We were able to transfer that into a long and ride that up, take profits, and then move that into a short, and price started to come lower. We ended up taking a long down here, which we actually did take a little money on. Price came back down, and that's when we decided let's get long. And in hindsight, let's get long, let's get stopped out. I was thinking we could see some support, let's get long. Yeah, it did not happen. It is what it is. We actually got long down here, if you want to be exact, at 1 even. So we got long right down here. Price came up a little bit and then it just rolled over. That's what happened. Price came down, chopped around a little bit. We did get long right here at 6.5. We got long. We were able to take profits up here. Got long again down here, and ended up taking profits up here. Actually got long one more time here, and we did take profits rather quick. We got out right up here, called it a day, and it is what it is. It was a really great day. Getting long down here, did I think that price was going to come all the way up here? Not really. I was looking somewhere in this region. After this move up, I did feel very strongly that it was going to move up again. That's why we got long down here, and we did get a move up, and then we got a continued move off of that. So it was a very interesting day. It was one of those days that probably threw a lot of people off, because I know some people that did get thrown off. They're not members of a Business with Trading, other traders, and it is what it is. Win some, lose some. That's what trading's about. And it's really about how you handle situations. 28 and a quarter points. Yeah, it's a great day. But it's nothing to get excited about. Because 28 and a quarter points is not making your year. It's not making your multi-year. it's a great day. And that's exactly what it is. That's how I look at it. It's a great day. I'm going to go out and have some fun. Most likely not. I'm going to end up working. But this weekend, I'm going out of town and I'm going to have some fun. So, it is what it is. When you have a website like I do and you have a lot of coaching clients, you can't really do stuff during the week, but the weekends are, set up for fun. But I love trading. I would not trade this for anything. Pardon the pun. And that's why I do what I do. Yeah, I just love it. I have a lot of fun. And the last few weeks, last few years, we've talked about consistency. Last few months, we've been talking about having patience in trading. Those two do go hand in hand. Being aggressive every single day, in my opinion, is a sure way to go broke. I am very meticulous with my trades. I try to, limit the amount of trades. In the day trading room, 2 to 3 trades a day on average is what I like. And like I said, when things are working on all cylinders, you can make more trades. Today we made 7 trades, which is, I think, the most we've made all year in a day. I'd have to go back through the stats, but I believe it's the most we've made all year in one day. And, that's because that's how I feel. That's how my method is. That's how my strategy is. It's set up to, take a couple trades every day. I go into every day knowing that I don't need to make a trade. Some people might like that. Some people might not. I've had some people work with me and they don't like that. I need to make more trades. Okay, well, we can't work together because that's not how I roll. I've had people, why don't you trade this way? I was like, well, do you trade that way? Are you successful? Well, that kind of answers it right there. But why would I change my way of trading? My way of trading works great for me. I've taught many other people the way of trading that I do. And they're successful. Trading is something that's different than anything else. There are a lot of success coaches out there, like Tony Robbins, for example. And those people, talk about people who've become successful and have gone on to do great things and, improve their lives and stuff. Trading is something that's more private. A lot of people don't like to get out there and say, I did this, I did that, look at this. Some people do, but a lot of people don't. If you look at market wizards, for example, a lot of those people, most people haven't heard of. As far as the general public is concerned, most people have not heard of them because they're not famous. They're not celebrities. They don't sing songs. They don't do funny YouTube videos. But trading is something that isn't supposed to be that. It's not something that makes you famous or puts you in the limelight. The general public, they hate hedge fund managers. They make fun of banks. You see it all the time. Get on Facebook or, Google something to that nature. But I don't want to make today's video negative. Today was a great day. Let's focus on that. So today was really good because we set this up many years in the making. I've been trading this strategy for, it's been many, many years. The website's started in 2010. I was teaching people many years prior to that, and the website just kind of culminated from that. So I've been trading the strategy since then. I would say it was all set, around 2005, 2006. It was in the makings since like 2002, 2003, but it was finalized probably around 2005, and then basically all you can tweak is the risk management. Because once once you get a method so long evolved, that's basically all you can do is change, your risk management, tweak it here and there. What happened this day, what happened that day. Okay, let me tweak this, let me tweak that. But you're not going to tweak your setups. Your setups are going to be the same. And that's one thing about, I see a lot of times, let's trade in this type of market, It's bullshit, If you have to change your trading style for every single different type of market, you're going to get a headache. That would piss me off. But anyway, I wanted to talk about that a little bit. Through utilizing your consistency, you're making money consistent. Adding 28 and a quarter points to your P&L is phenomenal. We've made our month already, and it's about halfway through. That's when you know that you're onto something, that your trading is working, that you're doing well. And that's what trading should be about. Trading should be, you're going to have a couple days that are going to be easy. You're going to have some days that are difficult as hell, and you're just going to want to go punch a hole in the wall or something. And it's that day that really makes you as a trader. So when you have days like this, it's because of all of those prior days that led up to this day. Some people have good days and they're flukes because maybe it's their first day trading and they just have an awesome day. Or maybe it's their first week of trading and they happen to have an awesome day. And that's basically nothing to do with them or what they did. It just happened. But for the most part, you've been trading 3, 5, 7 years, 10 years, 15 years. Those days are going to come more frequently because you have a method down, you know your system, you stick to it, and you're able to just make great things out of it. So, anyway, I know I jumped around a lot of different topics today, so, if you have anything you want to add, anything that stood out, don't hesitate to put that in the comment section. I wanted to talk about an option trade that we did, and it's interesting because I did not get an optimal entry, but it is what it is, and we still made money on it. So, Macy's. We were long from below, off the chart here, and I decided when price got up here, I think right here around this doji bar here, I got the bright idea. I was like, well, the market is starting to not look that great. Let me spread it. And that's what we did. So we sold a call here to match our long call that we had from below. It seemed like a good idea because it was, I could take it off or I could spread it. And, I do different things depending on what I see. I think Macy's does go higher eventually. And sooner rather than later, I think so. So that's why we spreaded it. After the spread, after we sold this call here, price went up, and I was like, oh man, I could have gotten an extra, 50 cents out of it if I would have just waited and sold it over here. If I would have sold it over here, I would have gotten an extra 30 cents out of it. And that's the call that we sold here. We sold the April 70 call here for 28 cents. 29 cents, sorry. We sold it for 29 cents. Usually when you're doing stuff like this, pennies count. And, that's what I was looking at. And I wanted to show you because we didn't get an optimal entry, yet we still made money on it. So we sold this. Okay. This was on the 6th. Okay. This was on the 7th. Next day. Opened up. We're like, oh wow, we could have made an extra 30 cents if we would have just waited a day. Over here. Oh wow. This was the 8th. If we would have waited 2 days, we could have made 50 cents. And that's on top of this price here. So we could have gotten about 79 cents out of it, something like that over here. Over here, it was around 50 something, so not quite 30 cents, but more, maybe 25 cents we could have gotten an extra. That's not how I look at the trades. But I wanted to point this out because I thought it was interesting. It's a good learning example. Because it's not perfect. A lot of people out there show perfect trades, and that's bullshit too. Because trading is not perfect. Trading is something that you do as a process to grow your income. It's definitely not perfect, and every trade is not going to be the same. Every setup is going to be slightly different, but it's going to be a setup. So hopefully that makes sense. So anyway, that's how I looked at it. I was like, let's spread this out. It's okay if it comes up, above our entry, then I'll just have to close it. We'll make. I think I had it set up. If it closed above here, we would have made like an extra 20 cents than if we just took our call off down here. So it was something similar to that. Not the best, but definitely not the worst. And if I need to protect myself, that's what I'm going to do. Okay, so we sold this for 29 cents. Okay, we watched this and we're like, yeah, could have made a little more if I held here. Could have made a little more if I held there. That's not what's going on in my head. That's reality. What goes on in your head and what is reality should be different. You shouldn't be thinking that. Oh shit, could have made extra 25 cents. Oh shit, could have made extra 50 cents. Doesn't matter. Who gives a shit? All you're doing is giving yourself a reason to be confused. And trading's difficult enough. Giving your brain extra reasons to be confused is not what you want to do. You want to do the opposite of that. Because the more your brain is confused, the more haphazard your trading is going to be, and the more likely you're going to do something stupid to lose money. It is what it is. I don't sugarcoat stuff. That's not what I do. That's how it goes though. That's what happens. So anyway, today, the 14th, the price goes lower, goes a little bit lower, and I caught it around this area, I believe. Let me give me just a moment to look it up, and I can tell you exactly when. 12:09 is when I got filled. Okay, so I saw it right around here, and it was, I think, 68.12 at the time. Okay, so we sold it over here. We sold it around 68.01. But it was an April call, and that premium is getting taken out every single day. Obviously, if price goes higher, even though you're going to lose some premium, it's going to go up just because it's at our price. But since it did move down, it was a few days later, premium has come out. So I saw it right here. Price comes up. So I put in an order to exit at 16 cents. And that's what we ended up getting. So if you look at it, we sold for 29 cents. Okay, then we bought it back for 16 cents. Okay, and I know I write pretty badly, but it is what it is. I'm a trader, not a English professor. Okay, so we made 13 cents, which is, we made 44% on our money. And obviously we're not trading one contract, we're trading many contracts. And Macy's is a very liquid option chain. So you can trade hundreds of contracts and be okay. So what we were looking at is on the 6th to the 14th, we were holding this short call 29 cents. But it was against our long call, so we did not have to spread this. selling this call made our long call a spread. So we were okay. And that's what I like to do because we have a longer dated call and we can do this all the time. We can sell against it, but we have to have an optimum entry. We have to be able to say there's a very good chance that price doesn't come into this area. Are we right all the time? Hell no. It's trading. It's not perfect. Some people would have you believe that, and they are full of shit. It is what it is. Excuse my profanity if you don't like that, but it is what it is. So anyway, I wanted to show that. I thought that was an interesting trade. It was definitely a far from perfect trade. I kind of thought there for a minute, and that's why we got out when we did. I didn't want to have to take off the entire spread, and that's why we did what we did. It might go sideways and close below 70, and we were like, well, we could have made it all, but, we made 44% on it. We sold it for 29, bought it back for 16 cents, that's a 13-cent. Even if you have a really shitty options provider and you're paying $1.50 per side, you're still making money. If you're paying more than that, then you have a really shitty options provider, and you really need to talk to them. So, anyway, hopefully you enjoyed the video. You got something out of it. If you got something out of it that you really enjoy, feel free to share it. That's what we're here for. That's the entire reason I started the website. Build a business around your trading and have a community. Those were the two reasons. I was unable to meet any successful traders, but now that I'm successful and I'm able to actually make money with it, that's what I can do, is help others become a better trader. So anyway, feel free to share your thoughts. If anything stood out to you, if you want to add something, comments are below. If you'd rather email me, that's fine as well. support@abusinesswithtrading.com. Can't wait to hear from you. Have a great rest of your day. Thanks for watching, and I'll see you back here in the markets. Thank you.